Good morning, everyone. So I welcome you to today's webinar on income tax, on a topic about income tax. So first of all, I extend all of you a very grateful thank you for supporting us throughout our journey of conducting this webinar. So this platform has actually empowered us to disseminate knowledge, to take it to you, all the new changes in the provisions, whether it is GST or income tax. So predominantly, we have been doing our webinars about the topics in GST, but however, we have also been trying to include many topics related to income tax also. Of late, we are also getting many interests from our regular viewers to share our thoughts regarding income tax topics also. All of you very well know that as of now, we have two income tax acts which are applicable for the currently which are applicable. So one is Income Tax Act 1961 and another one is Income Tax Act 2025. So financial year 25-26 will get assessed under Income Tax Act 1961, whereas for financial year 26-27 and onwards, we have Income Tax Act 2025, which comes to picture. So many of you might have already attended webinars or in-person sessions to get enlightened about the Income Tax Act 2025 and what it is all about, right? So what do we bring differently? What is it that we are trying to share with you? See, from our point of view, it is always our efforts, or always it is our objective to take these provisions of law and make it into a simple and understandable manner and share it to all our audience. So that has been our objective, whether it is under GST or Income Tax Act. So the main objective of Income Tax Act 2025 itself, as claimed by the law drafters, by our Honorable Finance Minister, is that the provisions, the language used in the provisions have been simplified. The number of provisos, the section, the relevant part of the section which goes against the section itself, those has been curtailed, so that a person who is reading the law would be in much better position to understand and take decision in their to the consequences related to income tax. So that is the major purpose. So what about the TDS aspect? See, TDS being a section which has its implication in day-to-day transaction. See, you will be making many payments on a day-to-day basis, monthly, quarterly, whatever frequency. So throughout the year, for TDS, if you are deducting the TDS under incorrect section, if you are deducting TDS on an incorrect rate, then you will be getting to know it only on a later stage. And at that point of time, it will be tedious, it will involve duplication of work, everything to rectify the mistake that you have already been committed. So for that reason, we thought it would be the best to start discussion about Income Tax Act 2025 with the TDS provisions, right? So in the earlier act, under 1961, we had many provisions. We had section 192 to 195, which covers the TDS aspects, and different sections for different rates and different purposes also, right? So these will be scattered across the act. Whereas in Income Tax Act 2025, all the TDS relevant provisions has been included in section 392, which talks about salary, then 393, which talks about other than salary. In that, there are relevant subsections which has covered all the TDS aspects. So it has simplified the TDS applicability and also presented the whole table, the applicability, who are the persons who has to deduct TDS, and what is the threshold limit. All these things has been presented in a much better and understandable tabulated manner. So this has been the major change regarding TDS, and we are going to explain our fellow chartered accountant CA Balakrishnan. He is there, he is handling income tax. So he is here to explain you about the TDS provisions and what are all the doubts that you have that has come across to your mind even earlier or through the webinar. In between the webinar, you can raise it across, you can put your questions in the chat box so that we'll be more than happy to answer those questions once our webinar, our presentation is over. So now I am handing over to Balakrishnan, and he will take it from here. Thank you once again.
Very good morning, everyone. In this part of webinar, we are going to discuss about only key TDS provisions under new Income Tax Act 2025. In the Income Tax Act 1961, there are so many sections that covers TDS provisions. But in the Income Tax 2025, majorly only 2 sections covers predominant sections of Income Tax Act 1961. Without wasting further time, we'll go to the subjects. First, we will see the timeline of the Income Tax Act 2025. In the any act, it must be passed with the initially it will come with the Rajya Sabha, Lok Sabha. Initially, any bill to convert this act, then first need to be passed under Lok Sabha, thereafter Rajya Sabha, and then it need to get presidential assent, and thereafter it must be notified in the Gazette of the Gazetted in the India. So thereafter only act bill becomes act. So for the Income Tax 2025, in the originally in the February 2025, the bill has been introduced. Thereafter, in the July 2025, Parliamentary Select Committee submitted their report with further recommendations. Thereafter, there are too many recommendations has been received for this bill. So that original introduced bill has been withdrawn on August 8. Subsequently, August 11, 2025, the revised income tax bill passed in the Lok Sabha. Thereafter, in the very next day, that is August 12, 2025, the bill has been Income Tax Bill 2020, Bill number 2, Income Tax Act 2025 has been passed in the Rajya Sabha, and it has been presidential assent granted on August 25, and subsequently noted in the Gazetted, subsequently notified in the Gazetted of India, and after that it has been effect from 1st April 2026. In the Income Tax Act, there is no concept of financial year and assessment year. Only tax year will be specified in the everywhere in the Act. So we need to refer tax year only. Tax year means financial year. That is the previous year in the earlier Income Tax Act. So what is TDS? Generally, TDS, when TDS need to be deducted, and what is the threshold limits, what rate TDS needs to be deducted, and all we are going to see in this webinar. First, TDS will ensure the tax collected by the government at the early time as and when income is generated by the assessee. That is generally taxes collected at the time of year end, because we are filing returns at the end of the after the end of the tax year. But to prevent to collect the revenue for the government and to get know about the transactions, government will introduce the TDS mechanisms. So in that, TDS is generally deducted at the time of crediting the amount to the account of the party, or at the time of making payment. In some cases only, TDS need to be deducted and deposited at the time of payment. In all other cases, TDS need to be deducted at the time of crediting the party, that is booking expenses, that is accrual basis expenses we are booking, then TDS need to be deducted at that time itself. And some meaning are deductor means payer, the person who is making the payment, that is in the person books who is booking as expenses, that person is the deductor. And deductee is the person receiving the payment, that is he may receive it as income, that is that person is called as payee. And TDS, as I said earlier, TDS ensures regular tax collection and prevent tax evasion by tracking mechanism, because once TDS is deducted, then that will reflect in the form 26AS. That form has been now replaced with another form number, and it will also get reflected in the annual information statement and taxpayer information summary. And chapter 19 of the Income Tax Act 2025 deals with the TDS provisions of Income Tax Act TDS provisions. In earlier, the TDS sections are 192, 194, 194. There are so many sections: 194A, 194B, 194C, 194J, H, I. There are so many sections, but it has been now consolidated into only 2 sections, so that everyone can get in touch with the provisions. Because as said earlier, the Income Taxes Act 2025 is to introduce to simplify the existing tax Income Tax Act. In the Income Tax Act 1961 versus 2025, the major difference is, as I said earlier, TDS has been scattered under section 192 to 196D, which is applicable for the financial institution investors. And in the Income Tax Act 2025, it has been 2 preliminary sections, that is section 392, that is applicable for TDS and salaries, that replaces the section 192, that is earlier TDS section for salaries. Section 393 is TDS on payments of other sum, which replaces all other sections like 194A, C, J, that is professional services. All other sections are subsumed in the section 393. The table serial numbers as the primary key identifier for TDS complaints, because in the Income Tax Act 1961, we used to refer 194C, 194J, or 94J or 94C, but in the Income Tax Act 2025, we are going to use only on the basis of table serial number. There are 3 tables are there: table 1, table 2, table 3. So before that, going to the table serial numbers, we will see some basic definitions that will get an understand of what is meaning of the terms used in the tables. Any person means all assets, that is individual, HUF, company, body of individuals, trust, whatever company it may, whatever asset it may, it will cover under the definition of any person. And specified person. Specified person means like we have threshold specified persons for 194C and J. Any person other than individual and HUF, and individual HUF, provided if their business or professional receipts are exceeds 1 crore or 50 lakh immediately preceding the tax year, which means applicable tax year is tax year 26-27, which means we need to check financial year 25-26 to check the threshold limits. And rate in force, there are many tables, serial numbers, there are used as rate in force. Rate in force generally means rate specified in the Finance Act, which means Finance Act has been 2026 has been introduced in past. So in that act, the rate has been given specifically for that table, which means, say for example, 194J, the TDS need to be deducted at the rate of 10%. If in the 194J, the applicable rate is rate in force, they have mentioned that, then we need to check the relevant Finance Act to get the exact rate of the such table serial numbers. And TDS on salary and DPF. As I said earlier, section 192 and 192A, that is EPS, accumulated EPS withdrawals, that has been covered in the section 392. Earlier, there are two sections, that is 192 and 182A, but now it has been replaced with Income Tax Act 2020-25 replaces only one section, that is 392(1), and there are so many subsections in the same section. It 392(7) covers 192A. Quarterly form applicable for employer-employee reduction, that is salary is 24Q, but it in the Income Tax Act 2025 it replaces with form number 138. And salary TDS rate is average rate of tax. Average rate of tax means we will I'll tell you in the next slide. And the EPR accumulated withdrawals and employee provident fund is tax that the TDS need to be deducted at the same rate, that is 10%. Earlier Income Tax 1961 also 10%. Income Tax Act 2025 also 10%, and the threshold limit is 50,000, which means in excess of 50,000, the TDS need to be deducted at the rate of 10%, provided if the person not providing continuous service for in that company for 5 years. If the person providing continuous service for more than 5 years, then TDS under section 392(7), that is earlier section 192A is not applicable because that is exempted. This is effective from the tax year 2026-27, then which means we need to refer new form. That form will be getting notified shortly, and new income tax sections. In the CDS, as I said earlier, the liability to deduct the TDS arises only at the time of payment. In all other cases, liability to deduct the TDS need to be deducted at the time of crediting the party or making the payment, whichever is earlier. And the average rate of income tax means we need to compute the total income tax for that assessee and divided by total income, so that we can get the average rate of tax. That is, say for example, we need to compute it based on slab rate that is given in the Finance Act 2026, so that we can get the average rate of tax. Income tax computed is based on the rates in force, that is the rate that has been notified in the Finance Act, relevant Finance Act. For the tax year 26-27, the relevant Finance Act is 2026. So we need to refer the rates in that. For individuals, the slab rate is applicable up to 4 lakh. There is no nil tax. So that is applicable for the individuals. And employer, while deducting the TDS under section 192, they can consider salary from any other employer, or income loss from house property, or income under any other head, provided if that has been given by the employee to the employer. And they can also consider TDS or TCS credits while deducting the TDS under section 392 of Income Tax Act 2025. And in the categories sections, in the section 393, there are table codes. Only table codes has been used in the section 393. There are total 3 tables. That first table is for payments to resident. Then the second table is for payments to non-resident. Third table is for payments to any person, irrespective of any, which means their residential status. So there are 3 broader categories in the section 393. In the for payments to non-resident, section serial number 1 that covers commission or brokerage. In the earlier section is 194D for insurance commission. The insurance commission TDS rate is for individuals, it has been notified as 2%. For which this is effective from 1st October 2024. And for domestic companies, the rate is 10%. Threshold limit is 20,000 for all. And commission for 184 H is applicable for many SCs. So this section is important because commission or other commission are covered under serial number 1, 2. This serial number is very much important because in the future, we while filing the TDS returns, we need to deduct at the rate specified in this serial number only. If serial number is jumbled, then the deduction rate would be higher or lower, as the case may be. That may leads to wrong reporting of income or TDS reduction. And for TDS for commission or brokerages, rate is 2%. The threshold limit is 20,000, and the 1961 Act covers section, in the section 1961, in the Act 2000, in the Section 184H has been covered under 1961 Act. Rent payments are covered under Section 393 serial number 2. It for rent payment under 392 serial number 2(1), there is no TAN is required, because this earlier section is 194 IB. In the 194 IB, while making rent to person, so we don't have we not required to take TAN. That is written come statement. So TAN is not required. And rent for plant and machinery or equipment, specified person. As I said earlier, specified person means any person other than individual, and individual HUF having business turnover of more than 1 crore and gross receipts of more than 50 lakhs, they are covered under specified persons category. The threshold limit for rent is 50,000 per month. Earlier, some interpretation maybe have 6 lakh per annum, but it is not actually that. The rent is 50,000 per month. If we are booking 6 lakh at the end of the year, which means end of the March, then TDS need to be deducted at 10%, because the rent we can see it in the monthly basis, or else we can separate in book it in the month-on-month basis. Otherwise, TDS would be applicable in the Section 194I. So rent for plant and machinery is 2%, as in the 194I also I in the old Act also say gives the same rate. And rent for land or building also 10% at the rate of 10%. Also in the earlier section 194I, that also covers TDS need to be deducted on rent at the rate of 10%. And serial number 3 of section 393 covers immovable property transactions, including the proper transfer of property and other than rural agriculture land and joint development agreements. That is earlier section is earlier section means 1961 Act section is 194 IA. Now it has been covered under table number 3, table number 1, serial number 3(1), transfer of immovable property other than rural agricultural land. Because in the table they have given that other than agricultural land, but thereafter specifically given that urban agricultural land is subjected to TDS. So I have mentioned that as rural agricultural land that is exempt from tax. Payer is the buyer. Buyer need to pay at the rate of 1% of consideration or stamp duty value, whichever is higher. They need to deduct the TDS, and the threshold limit is 50 lakh. Next up 50 lakh, we need to deduct the TDS. Consideration under joint development agreement, JDA. This earlier section is 184 IC. Any person, payer is the any person, rate need to be deducted at the rate of 10%. There is no threshold limit for JDA. JDA. Compensation for compulsory acquisition, this has happened rarely. So this is payer is any person, and rate need to be deducted at the rate of 10%. Threshold limit is 5 lakh. The Income Tax Act 1961 section is 194 LA. And serial number 5, I have skipped the serial number 4. As I said earlier, I have only covered frequently and most used sections that have been I have covered. In the subsequent session, we will cover all other sections also. The serial number 5, this will cover interest payments, that is interest on securities, interest other than securities, such as interest, bank interest, that all we have covered here. In the serial number 5(1), interest on securities has been covered. The earlier section is 183. The TDS rates is, the rate is rate in force. Rate in force means the rate specified in the Finance Act. Finance Act 2026, that is applicable for the tax year 26-27. Though there is no change in the rate, that so that I have mentioned 10%. Interest other than securities by post, by bank or cooperative bank or post office need to be deducted at 10%. Threshold limit is for 1 lakh for senior citizen and 50,000 for other than senior citizens. This earlier section is 184A. And in the 184A, another bifurcation is other than banking company, cooperative bank, and post office need to be deducted. Any persons other than, that is specified persons, like business turnover and gross risk criteria conditions need to be satisfied for individuals and HUF. That persons need to deduct the TDS at the rate of 10% if the total interest payment is more than 10,000. The earlier section covered is section 194A. And the serial number 6 of section 393 covers 194C, 194J, and 194M. 194J and 194C are most and frequently used sections by all associates who is having business turnover. And 194M is used other than specified persons, which means other than serial number 1 and 2. That is, if a person does not have any business income or gross receipts, and at the same time the threshold limit is less than specified person. That is, say for example, if a person having gross receipt business turnover of less than 1 crore and incurring expense of more than 50 lakh for contract, then they also need to deduct under TDS under section 6, section 393, table number 62. That has been covered under 194M of Income Tax Act 1961. In most important section is 194C. That in the Income Tax Act 1961, 194C is payment to contractors for carrying out of work. That has been now has been replaced with section 393, serial number 61. That is payment to contractors for carrying out of work. Payer is any person, designated person, and rate or threshold limit is 1% for individual or HUF, 2% for other than individual or HUF, and the threshold limit is 30,000 in case of single payment or 1 lakh in case of aggregate payment during the tax year. So 194J, professional service, technical service, royalty, director remuneration, that has been TDS need to be deducted by the specified person at the rate of 10%. 2% for technical and call center. This will explain. I will explain the this sheet, this presentation. We have summarized the professional services TDS rates along with applicable threshold limit. The threshold limit can be separately considered as well as combinedly considered for royalty. For fees for technical services, not for being professional services, the TDS rate is 2%. And the threshold limit is 50,000. This threshold limit is separately need to be considered. Fees for professional service, we need to deduct the TDS at the rate of 10%, and the threshold limit is 50,000. Up to 50,000, there is no TDS need to be deducted. If more than 50,000, then we need to deduct. Then we need to deduct the TDS from rupee 1. To whatever amount we have paid, we need to deduct the TDS excluding GST amount. For royalty in case for consideration of sale or distribution or for film industry, then TDS is 2%. For other royalties, TDS is 10%. The limit is combined limit, that is 50,000. If you are receiving up to 50,000 royalty, then no TDS need to deducted by the. Otherwise, TDS need to be deducted by the payer. And fees, commission, whatever name called, which means director remuneration. If director remuneration is not covered under section 182, that is employer-employee concept is not established, then we need to deduct the TDS at the rate of 10%. There is no threshold limit for director remuneration covered under section 393, serial number 63. And non-compete fees is TDS need to be deducted at the rate of 10% in excess of 50,000. Non-competency fees means amount paid for not doing business or something like that. And serial number 8 that covers life insurance. Serial number 8 covers residuary class, like all other sections are coming under serial number 8 of the Income Tax Act 2020-25, which includes virtual digital assets also. Life insurance policy portion, that is taxable portion only. If exempted, then no TDS need to be deducted. Payer is any person. TDS need to be deducted at the rate of 2% of the income portion. And threshold is 1 lakh. And purchase of goods exceeding 50 lakh. That is section, earlier section is 194Q. This is mostly applicable for the many assets. In this case, buyer means any person who is having turnover of more than 10 crores during the immediately preceding the tax year. So they need to deduct the tax at the rate of 0.1%, and TCS is not applicable for the financial year 25-26 also, and the 26 tax year 26-27 also. There is no concept of TCS for purchase of goods exceeding rupees 50 lakhs. And one more important section is 194R, that is benefits or perquisites from business or profession, that will covered under serial number 8. That payer needs to be specific person. Specific persons means, as I have given explanation in earlier presentations, and the rate need to be deducted at the rate of 10%. The threshold limit is 20,000. Except if benefit or perquisites is more than 20,000, then the TDS rate is 10% and need to deduct TDS. And e-commerce transactions 194 as per Income Tax Act 1961, it has been now covered under section 393, e-commerce transactions. So e-commerce operator need to deduct the TDS rate at the rate of 0.1%. And VD virtual digital also, any person need who is the payer of making payment to any person need to deduct the TDS at the rate of 1%. The earlier section is 184, yes. And as I said earlier, the table number has been, there are total 3 table numbers. One is for table 1 is for payment to residents. Second table is payment to non-resident. Table 3 is payment to any person. In the table 3, serial number 7 of section 393 covers partners remuneration. In the Income Tax Act 1961, 194T covers partners remuneration. That the threshold limit is 20,000 if partners remuneration including interest on capital or commission or bonus, whatever amount paid to the partner of the firm, then partnership firm need to deduct the TDS at the rate of 10%. The threshold limit is 20,000. If the remuneration or interest on capital is up to 20,000, no need to deduct TDS. If exceeds 20,000, then they need to deduct the TDS. So for in the financial year 25-26 also, this 184T is applicable. So while finalizing the books of accounts, ensure that TDS is deducted and deposited within the time. TAN not record cases. These are the cases which tax account numbers not at all required. For serial number 21, that is rent payment by any person next of 50,000, that is other than specific persons, then they no need to obtain the TAN. And transfer of immovable property 194IA, which earlier also there is no TAN requirement. In the Income Tax Act 2025 also there is no TAN requirement. And contract commission other than insurance commission, that is in excess of 50 lakh, other persons, any person other than specific persons making payment in excess of 50 lakh, then they also no need to obtain the TAN, provided they don't have any business and gross assets. Non-applicability of TDS, lump sum premium. If rent is on long-term lease and initially upfront we have received the rent, then TDS on rent is not applicable. This has been given in the circle itself. And cooling charges paid to cold storage owners is not covered under rent. It is covered under the 184C, that is contract work. So, and TDS and GST, which means GST component is need to be excluded while deducting the TDS. Generally, TDS means TDS, while deducting TDS, we need to consider excluding GST component. In case of TCS, we need to consider including GST, total amount paid to the person. Work includes, this has been included in the Finance Act also. TDS on supply of manpower has been covered under the work. So TDS need to be deducted under section 194C earlier, under 393 in the new Income Tax Act. Cooling charges to the cold storage owners, as I said earlier, this need to be deducted in the 194C. Then purchase of goods, TDS need to be deducted only if TDS not deducted under any other section. If TDS has been deducted under any other sections, then TDS under section 194Q is not applicable. The tax shall be deducted in the 184Q is like beneficial. In excess of 50 lakhs, we need to deduct the TDS. In all other sections, we need to deduct from rupee 1. So another important update is changes in the accounting software. We are using Tally or SAP or customized software, whatever it may. We need to make change and adopt the Income Tax Act 2020-25. So in the earlier Income Tax Act, we have mentioned that 194C, 184J, like that we have configured the same. So in future, which means in the 1st April 2026 onwards, that is tax year 26-27 onwards, we need to make sure that accounting software also need to be configured as per Income Tax Act 2025, which means we need to specify the table serial numbers to deduct the tax and nature of payment. Tabular classification. So classification has been based on table and code system. In earlier, we have referred to 94C, 94J, but there is not at all relevant from the tax year 26-27, and table codes has been used in the Income Tax Act 2025. So we need to refer and keep on referring the amendments for TDS rates. Also, if you have any queries or any customization for SAP or accounting software, if at all you have required, we will provide support to you. So if you have any requirements in the changes in the accounting software, please get in touch with us. And TDS certificates, as I said earlier, section has been replaced and forms also has been replaced with the new form numbers. Form 16, that is employer need to give TDS certificate to employee, that is form 16, that has been replaced with form number 130. And form number 131, formerly known as form 16A, that is other than salary, like 184C contract, 184J, that and all has been issued in the TDS certificate has been issued in form 16A, but now it has been replaced with form number 131. And form number 132 is consolidated certificate for property sales, like TDS challan statement cases. So that has been now replaces with form number 132. And quarterly return statements also has been changed, like form 24Q salary related TDS has been now replaced with form number 138, and form number 140 has been replaces the form number 26Q, that is other than salary cases, to residents. And form number 144 that replaces the form number 27Q, that is for any payments to non-residents. And challan come statements such as 26QB, like transfer of immovable property, that has been replaced by form number 141. And correction window, this is a major important change in the Income Tax Act 2025. The correction has been now only permissible 2 years from the end of the 11th tax year, which means correction has been filed within 2 years only. So which effect from 1/4/2026 is this is applicable. And form 26, that is earlier tax passbook or tax statement, has been renumbered 168, that is tax statement. There is no form in the Income Tax Department will also change the form numbers as this is form 26 is as per Income Tax Act 1961. They will replace in the form number 168. And as I said earlier, they have replaced the many sections into single section, that too has given it as table, so that everyone can read and understand the tax rates along with the threshold limits in the section itself. And for March 31st, 2026, the TDS is the key due date for correction, because before March 2026, we can correct the TDS returns up to 6 years from the end of the financial year. That is financial year 18-19 Q4 onwards, we can correct it. But after 1st April, after 31st March 2026, that is on 1st April, we can correct the statement up to 2 years only. So if you have any pending demands or corrections need to be filed, then act immediately to correct the same. Otherwise, online correction is not at all possible. Due date for TDS. Generally, due date for TDS, the TDS need to be paid for April to February. The TDS need to be paid 7th of the next month. Say, for example, April 2026, we have entered into contract and we have deducted the payment we have deducted TDS. Then such TDS need to be deposited before 7th of the May. For March month also, for March month only, the TDS need to be deposited up to 30th April. And I have mentioned the due date for return filing also. For quarter one, TDS return is for quarter one means April to June. That quarter due date is 31st July. Q2, Q3 also have subsequent month due date 31st. And for Q4 alone, the due date is 31st May, because the due date for making payment is itself April 30th, so that the due date for return filing has been given as additional one, that is May 31st. Advance tax. So for now, we have covered many sections in the TDS. Key sections in the TDS as per Income Tax Act 2020-25. This advance tax I have mentioned as Income Tax Act 1961, because tomorrow is the Sunday, but we have advance tax due date for the Q4 of financial year 25-26. Why advance tax has been need to be paid, and when advance tax need to be paid? When advance tax need to be paid is if your total tax liability exceeds 10,000, then we need to pay the advance tax in installments, so that government can get revenue based on in the installments itself. There is no huge payments, huge tax burden at the end of the financial year for the taxpayer. Final installment need to be paid 100% of the total tax liability. Otherwise, 234C interest will applicable. So if advance tax due date is not compelled, that is tomorrow is the due date. If not paid before tomorrow, then 234BC interest is applicable. 234B is applicable when 90% of the total tax liability is not deposited as advance tax, and 234C is applicable when shortfall in the interest payments during the quarter, this quarter, last quarter, or it will compute based on Q1, Q2, Q3, and Q4. And provided there is one option is available, we need to deposit the 100% of the tax before 31st March, then 234B and C interest will not be computed. Otherwise, 234B and C interest will be computed on total outstanding net outstanding tax liability. And nowadays, many associates receiving fake demand mails from the some other persons. So be careful while receiving such mails. Do not respond to such mail. If you have received, you have demand so on, so you need to click and pay this link. So you do not touch the link. If at all we have paid, then we need to report to cyber security. So that that procedure is so difficult. So income tax department will never send any demand payment direct link to the if at all you have received any mails like that, just check with the income tax portal itself, because department will never send direct notices without uploading in the portal. So we can refer in the income tax portal by logging into income tax website. So thank you all. If you have any queries, please put it in the chat box. I'll respond. And I have mentioned my contact number. In case of any queries, please do message me. And thank you for participating in this Entax webinar. Thank you all. Sridhar sir has been asked from April onwards, TDS has to be paid using new forms or challans. Yes, sir. It is new forms has been notified by the department. So we need to pay as per new forms only. Existing income tax forms are applicable for the financial year 25-26 only. TAN registration for partnership firm. If partnership firm is the threshold limit is not achieved and no remuneration has been paid, then they no need to deduct TDS. Hence, TAN is not applicable, sir, not mandatory. If the turnover is exceeds the threshold limit, then TAN is mandatory. Penalties for late TDS deduction is not has been revised in the new Income Tax Act. So Income Tax Act 1961 penalties has been same as applicable in the Income Tax Act 2025 also. Sure, sir. We will share the PPT if you mail the Zentax admin mail. So we will share it in the PPT. In the accounting software, we need to create new section code or modify the existing code. If you are not using continuous accounting software, then you can create it as new. But in some cases, if you are using continuous software like Tally, if you are using continuous Tally, then you need to create it as new, sir. Supply of food services covered, yes. Supply of food services covered under section 194C. So we need to deduct the TDS at the specified rate for the income tax for the financial year 25-26, and also in the Income Tax Act 2020-25 also supply of food services covered under table section 393. Form 15H and 15G also has been replaced. I will share the form replace PDF to you. Please mail it in the Zentax portal, sir. Non-resident TDS sections, we will cover it in the next session or subsequent sessions so that everyone will enlighten. What is mean by credit or payment, whichever is earlier? Credit means booking expenses in the books of accounts. That is, say for example, if we are booking expenses on accrual basis, then the party name is credited in the books of accounts. That is mean by credit. And payment means actual payment. That payment actually debited from our bank account or cash account. So that is called as credit or payment, whichever is earlier. Turnover limit for TAN applicability generally is 1 crore and 50 lakh for professions. 1 crore for business, 50 lakh for professions. It's the same late fee will continue the same. We'll check and let you know, sir. Repairs and maintenance. So repairs and maintenance, TDS is applicable under Section 194C of Income Tax Act 1961 and Section 393 of Income Tax Act 2025. So in that spares is included for subjected to TDS. Spares is generally not subjected to TDS if the spare price has been separately mentioned in the invoice and description has been separately mentioned in the invoice. Otherwise, the TDS is applicable for entire invoice value, that is excluding GST. So if online revision is not possible, then we need to go to the department for correction. They will definitely not do the same. So we can prefer an appeal, provided the time limit for appeal is not lapsed. Otherwise, condemnation need to be filed. Whether there is any change in 26Q and 24Q comparing with the new form notified in the new income tax law, there are some smaller changes, sir. But once forms get notified, we can talk about the same. The Income Tax Act designated persons, there is a separate definition given in the Act itself. You can just message me in the above number. I will let you know who all the persons that have been covered under designated persons, so that it will be easy, sir. So if you have any queries or any PDF need to be shared, please get in touch with us. So thank you for attending and participating in the webinar. Thank you all.